Hello friends, in this video we are going to learn the position sizing. So what does the position sizing mean? Why is it important to maintain the position sizing? All this we are going to cover in this video. So first of all, I would like to tell you that it is that much important as it is for you to buy at the correct price. So buying at the correct level is one thing, and but how much quantity you need to buy in order to secure yourself is the other thing, which is at most important. So in this video we are going to see how we can calculate, and then I will show you the indicator in the trading view which can help you to calculate the position sizing easily without any hassle. Okay, so let's start. So it refers to calculating the quantity of the stock you will consider buying. So suppose you have a fund value of 5 lakh rupees. So do you need to, or do you should you buy all the so should you buy the stock for all of the 5 lakh rupees or 5 lakh dollars, or should you buy for the 1 lakh rupees, or should you buy for 50,000 rupees? So we are going to systematically and mathematically calculate how much we should buy the quantity. Okay. So it refers to calculating the quantity of the stock you will consider buying, so that so that you know how much risk you are taking. Okay, so let's say you have a 5 lakh rupees, there is a stock of GRSE, let's say for 5,000, and I just discretionally buy, let's say 50 quantity. So 50 quantity. So I don't know if the stock fails or if my trade fails, how much I am going to lose. But by following the position sizing rules, we will know how much we are going to lose if that trade fails. Okay, so suppose following are the account details. So we have a fund of 5 lakh, risk per trade is 0.5%. Okay, now it can range from 0.5 to 1% or even 1.5 or 2%. Okay, so if we are talking 5 lakh into 1%, we are talking, sorry, we are talking about the risk of 5,000, not the investment value or the investment amount of 5,000. So what we are saying by referring to 1%, or if we consider it 0.5%, that if I plan a trade or if I execute a trade and if it gets failed, then I'm going to lose 2,500 rupees. That's all. I'm not going to lose any amount more than 2,500 if we follow the position sizing. That exactly it means. Okay. So, and it is suggested to keep that percentage from 0.5 to max 1%, 1.5%, and that too, that 1.5, the 1.5, that too in a bullish environment. Okay. Okay, so do not exceed above 1% or 1.5% as per the like market environment. So how much risk in dollar are you taking in each trade? So if we consider 0.5%, we are going to take 2,500 rupees or $2,500 as a risk. Okay, it is not the investment value, it is the risk. The risk, what does risk mean? If that trade fails, we are going to lose 2,500. Okay, so what does that is explained? So you are going to lose 2,500, and a good part is we are now entering to the professional trading, which it is globally followed. Okay, it is not something which is just on a bookish thing or a theory. It is the thing which every big traders, professional traders follows, because they know how much they are going to lose, and according to that they plan their trade. Okay, if you think you are going to lose, let's say 5 lakh rupees, you will not trade, or you can say 10,000 rupees, I will not trade that, take that trade, or take in the lesser quantity. Okay, so now so much, how much quantity of the stocks you will buy. So let's take two scenarios. So stock A has a price of 500. Stop loss is set as 480. Let's suppose we are going to learn about the stop loss in the different video. Okay, so we'll discuss how to arrive at a stop loss in the separate video. For now, just consider 480 as a stop loss amount. Sorry, the price at which you will get stopped. So the stop loss amount is 20 rupees. 500 minus 480. So if you buy the price at 500 and you consider 4% as a stop loss, so if the price comes down to 480, you will get out, and your loss amount per trade would be 20 rupees. Okay, and let's say the second scenario wherein the stop loss is 16%. It is too high, it is just theoretical. You are not going to set 16% stop loss in any case. It's just theoretical to let you understand how we are going to calculate the quantity. So let's calculate the positions. Now the position size, how the position size quantity is calculated is the risk amount. The risk amount in our case is 2500. That is the fund value or the account balance multiplied by the risk percentage. If you are taking 0.5%, 1%, whatever it is, we have considered 0.5% for this example. So risk amount divided by loss per trade. The loss per trade of 80 or 20 in case of stock A, stock B, 80 rupees. Okay, 500 minus 420. So in that case, in case of stock A, the risk amount was 2500. Okay, here you have risk amount, and the loss amount or stop loss amount was 20 rupees. So we divide the risk amount divided by stop loss, it is equal to 125.3. And in case of stock B, it will be 2500 divided by 80. Okay, so if you suppose you decide to take the stock B, the trade of stock B, so you will take the quantity of 31, and now let's say this trade get failed. So now you are going to lose 81 in 31 into 80, 2500 rupees approximately. Okay, so now when you follow this position sizing, you know that how much I'm going to lose. So you will not lose your mind, you will not lose your day, or you will not lose your consciousness ki, if that trade gets failed, how much I'm going to lose, I will lose my amount. No, because you know you are going to lose 2500. It's not a big deal. If 2500 is a big amount for you, you have to change the 0.5 to 0.3%, right? If you change, let's say in this example, if I change 0.5 from 0.5 to 0.3%, now your loss amount will be 1500, and accordingly this divided by 20, 75 quantity. So you can decide onto this percentage, and accordingly you can see if this amount is acceptable for you as a loss or not. Okay, so now we learned how to calculate the position sizing, but the good part is we are not going to calculate it. I'm showing you the indicator which I have made in the trading view, which will show you the quantity already calculated. Okay, so let's go to the trading view. Just a minute, let me switch to the trading view. So here is the trading view. I have opened the stock of Paras Defense, and now you can see the that quantity as well as stop loss price is automatically calculated for you. You just have to add the indicator, and then you will already have that amount, the stop loss price as well as the quantity calculated. Okay, so in this case, what we have done is we have taken the 1 lakh amount, 1 lakh rupees as a fund value, and the stop loss percentage is as per the ATR percentage, which we will discuss in the separate video. But if you want to change this stop loss percentage or what, you can change it, and you will get the you can modify those stop loss percentage, fund value and all. So just let me show you once as well. So here you will go to that dynamic position size and SL visualizer. You will calculate the settings button. So the account balance is set as 5 lakh, not 1 lakh. So we will say, we can modify it. Let's say I want to put it as a 10 lakh. We can modify it. It is mentioned as a dollar, but if you you can keep the amount as a rupees, the calculation will be same. It is not going to affect this. This is not going to change or affect it. So risk per trade, I have kept 1.1%. You can modify it. You can keep 0.5%, 0.7%, whatever it is. Now you can change the manual stop loss. Automatically it captures the stop loss. Okay, you have to calculate. You have to take the use manual stop loss option. So let's say 10 lakh is the account balance. You take 0.5%, stop loss is let's say 10%. So automatically the position size will get calculated, okay, and accordingly the stop loss. And this small red line shows where you want to put your stop loss, or in case you want to put the indicator or alert, you can just take this as a reference to calculate the your stop loss level. Okay, so hope you like this video. Do let me know your views on the comment box, and we will meet in the next video. Goodbye.